My mission is simple, to make you money. I'm here to level the playing field for all investors. There's always a bull market somewhere, and I promise to help you find it. Mad Money starts now. Hey, I'm Cramer. Welcome to Mad Money. Welcome to Cramerica. Other people are my friends. I'm just trying to save you some money. My job is not just to entertain, but to put things in perspective. So call me at 1-800-743-CNBC or tweet me at Jim Cramer. Today, the market threw a President's Day sale. You just didn't know it. Yep, almost everything got marked down today, and as usual, potential buyers ran from the sale rather than embracing it. Dow ultimately plunging 697 points. The S&P plummeting 2%. The Nasdaq nosediving 2.5%. Look, I don't blame anyone for fleeing. We have so many things going wrong right now. This morning, we just heard from two of the largest retailers in the whole country, Home Depot and Walmart. Got the CEO of the latter on tonight. Both companies made it clear that there's really no end to inflation, that it's eroding the purchasing power of the American consumer still, even as both companies are doing their best to contain it. At the same time, long-term interest rates, well, they just keep going higher, making stocks less valuable in comparison to bonds. That's a terrible combination. All centered on the fact that no matter what the Fed does, it doesn't matter. It can keep raising rates and nothing seems to stop inflation. When the market cascades lower like this, you have to recognize that we're going through what Wall Street's call a reset. A reset. Look, in plain English, that means almost all stocks have gone up too much since the beginning of the year, and they now have to repeal some of that move. Remember, the 2023 rally has been all about the idea that the Federal Reserve will soon be finished raising interest rates because it seemed to be winning the war against inflation. Now, it doesn't even seem to matter to people. It doesn't matter that Jay Powell, the Federal Reserve chief, never said that he was about to win. He was not about to declare victory. He made some encouraging comments about disinflation, but he also made it clear that we've got a long way to go. It doesn't matter that he said there's been persistent inflation in wages, the thing the Fed worries the most about. The real big trigger pullers just assume we were in what I call a Dr. Pangloss market. Yeah, all is for the best in the best of all possible markets. So they bought the industrials. They bought the banks. And most important, they bought a ton of small cap tech stocks that just weren't worth what they paid for. Now that we're getting discouraging data on the inflation front, much of the buying, well, it needs to be unwound. Sell. That's why the selling's so aggressive, so torrid. Tons of institutional money managers just simply got the market wrong. They knew nothing. Amazingly, the big bond traders, they got it wrong too. Those who bought 10-year bonds thinking the economy would cool and inflation would go down also got bagged. Now they're selling bonds aggressively, which causes long-term interest rates to rise. More competition to stocks. So what does this have to do with you, with your portfolio? Well, it means that this darn President's Day sale may not be over. It might be one of those sales that lasts a couple of days longer to keep marking them down. Maybe today was just the beginning. Which brings me to the big questions. How long will the sale last? How do you know if it's even worth taking this opportunity to do some buying? Should you be joining the sale rather than buying into it? Sell. Let's take them one at a time. Should you join the sale? Depends. If you own stocks that are up huge for the year, it's definitely not too late to sell them. The S&P 500 is up low single digits right now. So if you own a stock, say up 25, 30, 40% more, recognize that the sell-off here is probably far from over for you. If you want to join it, take something off the table, even if today's bruising, you know what? Not a bad idea. However, if you own stocks that are up as much as the averages, not much more, I wouldn't sell them here. Not worth it. You can try to swap out and swap back in, but I fear you won't be fast enough to figure out what to do and get back. Now, which brings me to the point of tonight's show. How do you know when this President's Day sale is about to end now that the markdowns are just hideous? First, longer-term interest rates have to stop going higher, or at least stop going higher so rapidly. This is a tough call, though. The 10-year Treasury is yielding almost 4%, but the 2-year Treasury is yielding 4.75%. I've been saying that that's ridiculous, that you aren't getting enough interest on the 10-year. Long rates are simply too low. they have to go at least as high as the short rates. You aren't being compensated well enough for 10 years worth of risk. So there's a lot of wood to chop here, real tough. We need rates to calm down. The journey higher seems inevitable, but we need it to happen more gradually. If rates stop going up so aggressively, they don't need to go down. The sale might be nearing the end. Oh, boy, here's a tough one. We need to see last year's biggest losers that made huge comebacks. This year, we need them to go back down. I'm talking about the companies that are losing money and the stocks that are trading at high multiples to sales, not earnings. So many of these stocks, mostly these anomalous tech stocks, really aren't worthy of their current bounce-back valuations. Third, we got to see a resurgence of recession-resistant stocks, the PepsiCos, the Mercks. Now, here's good news. That move seemed to have started already. Great sign. Fourth, we need to see the banks stabilize. Why the banks? They become the unsung heroes of this market because buyers believe they can peacefully coexist with higher rates as long as the Fed doesn't tighten too rapidly. If rates really soar, though, then we got a problem with bad loans. But if rates dribble upwards, the banks represent tremendous value right here. Remember, every time the Fed tightens, these guys instantly become more profitable. Fifth, now that the retailers are reporting, we got to see the wheat separated from the chaff. We need to see some of the stocks go up, not be trashed, not all at once. For example, today, Home Depot reported an okay number, tepid forecast. Stock got crushed. Makes sense. Home Depot's earnings are tied to housing, and the Fed's doing its best to level housing. On the other hand, Walmart delivered a set of magnificent numbers. This is no longer your grandfather's Walmart. It's got value. It's got price. It's got a fabulous omnichannel business that I think is competitive with Amazon. It's encouraging that Walmart stock finished the day in the black. Again, we'll hear from the CEO later in the show. Finally, we really need to see an oversold reading on the proprietary S&P oscillator I'm always talking about, especially with members of the CNBC Investing Club. The oscillator is currently at minus 3.2. Not oversold enough. How about minus 5? Then we can take a look at it before we get in front of this freight train that is this sell-off. Bottom line, it's a tall order here. I don't even know if we can get all 6 of these. Unfortunately, this President's Day sale doesn't feel like it's over. But this checklist will give us a real good feel. Until more of these boxes get checked, respect the sellers. In fact, you might even want to join them if you have stocks that have had huge runs. They've got most likely, let's say, a lot more to fall. Let's take questions. Let's go to John in Pennsylvania. John.
Mr. Cramer, how you doing? Hope you had a good birthday.
It was fabulous. Thank you for asking, John. Seems like ages ago. How can I help you?
Last quarter, Yeti had a lot of good things to say. So, and first, I belong to the investment club and all that. And I truly love it. And the information on the oscillator is awesome.
Hope I can see you Saturday. What's going on?
Exactly. So last quarter, Yeti had a lot of good stuff to say, I thought. And so we waited for it to come down over time. And we bought it in we thought it was a pretty good price. And the report's here in a couple days. And a week or so ago, they had themselves a magnet problem. They
I know.
Back from there. Today's just a crush day for everybody.
Right.
What's your thoughts?
Look, they just changed CFO. I want to give them a little chance. I think that the stock can trade maybe 10% lower, and then I think John will be in good shape. But you know what? Don't get itchy to buy here. It's too hard. Look, unfortunately, this President's Day sale does not feel like it's over yet. Until more of these boxes get checked on our exclusive list, respect the sellers. Oh, man, buddy, tonight, Starbucks has a new product that interim CEO Howard Schultz thinks will be disruptive, maybe additive to earnings. I'm going to learn more about the latest innovation with the man himself. Then Walmart, as I mentioned, reported a quarter that received a mixed reaction on Wall Street initially, but then went up. I'm running through the numbers with the company CEO. And does Palo Alto Networks have what it takes to defend itself from the bears on the street? It sure looks like it. I'm going to talk to the company's top brass. So stay with Cramer.
Don't miss a second of Mad Money. Follow @JimCramer on Twitter. Have a question? Tweet Cramer. #MadTweets. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.